Good morning, ladies and gentlemen, and welcome to the first in our Plan Well, Retire in Style series from Enterprise Trustees. It's a pleasure to come your way this morning, and to get us started, we would like to start off with a prayer from Nana Abuaji, head of our business support unit. Nana.
Good morning, everyone. Shall we pray? Heavenly Father, we are grateful for a beautiful morning such as this. We are thankful for another opportunity to engage with our clients. We commit this event into your hands and pray that it becomes a success. In the name of the Father, the Son, and the Holy Spirit. Amen.
Amen. Thank you very much, Nana. So good morning once again. So as I said, this is the maiden edition of our Plan Well, Retire in Style series, and we are happy to have you, our cherished clients, customers here with us this morning. We are going to take you through a very short period to aid you on this journey towards retirement planning and how to end up having a very comfortable retirement when you are 60 or you're 55 or whenever you decide to retire. To get us on our way, we'd like to invite our Managing Director in the person of Mr. Joseph Ampopo to give us our welcome remarks. So Joe, if you're ready for us, over to you.
Good morning, all. Ladies and gentlemen, it's truly an honor to welcome you on behalf of Enterprise Trustees to the Plan Well, Retire in Style series. Ultimately, our mandate as corporate trustees is to ensure that our members receive their retirement benefits as and when it's due them. And notwithstanding this, a few years ago, much as we're ensuring the growth and safety of funds entrusted to our care, we did notice that it was important to build the capacity of our members, in order to prepare them adequately for retirement. As we all know, retirement is a period we will experience at the end of our working career, and it is better to be adequately prepared than to be caught unawares. Do I take it that there's no sound? Can someone hear me? I just saw
yes,
a message.
Joe, we can hear you loud and clear, Joe.
All right. Okay. So over the past few years, we've held a few of these sessions in Kumasi, in Takoradi, Tamale, all geared towards helping our clients to be able to better prepare. As an organization, we have adapted to the new normal and trying to engage in virtual engagements to be able to keep in touch with our members, irrespective of the fact that COVID has reared its head and also opened up another avenue. Because quite clearly, I'm sure if we were to have had this session in the non-COVID times, you'd have had to leave the comfort of your office, and drive to a particular location to be able to handle this. And that probably, as you are comfortably multitasking at the moment, would not have been possible. So yesterday we did have a stakeholder forum for our employer contact persons to give them an update on how the schemes are performing and initiatives that we are also putting in place to administer the schemes. So our Plan Well, Retire in Style series today is a holistic one. From the process of applying for your retirement benefits to lifestyle changes during retirement, it's important to be aware of what it entails to plan for it. I mean, today we're having a conversation with a targeted group of those at least between the ages of about 55, getting to about 59, and that is the cohort that you find yourself in at the moment. And we have representation from our dear regulator, NPRA, who are also part of this session, and also our partner, Social Security and National Insurance Trust, SNIT, who manage Tier 1. And it's important that they're also part of this conversation. And also we have a health professional to also assist us in this particular session. So ladies and gentlemen, and my dear members of schemes, I just entreat you to relax. I mean, let's take a listen to this these varied speakers who will come in, and let's be able to raise questions as well to get some clarity on the path that we surely are going to take in a few months or in a few years down the line. And we want to be sure that Enterprise would have better equipped you to handle that by providing you with this advantage in terms of advice. So I wish to welcome you all again to the Retire Well, Plan Well, Retire in Style series. And it's my expectation that at the end of this session, we'll be better informed than we were when we logged in at 10 a.m. Thank you. Over to you, Ransford.
Thank you very much, Joe, for that very brief and concise introduction. So we'll just go right to it. We are going to have a series of speakers to walk us through various presentations this morning. And as participants, we also have the opportunity to ask questions. So we'll have a Q&A session at the latter part of this program for all the questions that will be coming through. So just to let you know, our comments, enabled comments in the comment section, so you can put any questions or suggestions that you have in the comment section and pick them up right after we are done, right? So that we can pick them up during the question and answer session. So to continue with the program, we like to invite a rep from the National Pensions Regulatory Authority, the NPRA, in the person of Mr. Abrakwa, to take us through a very brief presentation on how to process your retirement benefits. So, Mr. Abrakwa, if you're ready, the audience is ready for you. Hello, Mr. Abrakwa.
Yeah. Good morning. Thank you
Yes, good morning, Mr. Abrakwa.
very much for this opportunity. I'm presenting. Please, can you hear me?
Yes, Mr. Abrakwa, we can hear you.
I sent my presentation to Doreen, so if she can share for me. Please, can you hear me? Or so you can share. Thank you very much to the authority to be part in a forum that has a platform to give education to people on learning. This is a welcome platform because we are required to do that as part of our duties. So I'll quickly run you through a little presentation. We're asked to do a presentation on the role of NPRA that is the role of processing. I am Kofi Asaipa. I'm deputy in this particular meeting. So we can go to the outline of the presentation. We're going to look at the qualification for benefit. Then we would actually look at application for the accrued benefit, timelines for the payment of this benefit. Then we will look at the processes of the application. So when the application has it go through, and then we will end on the rights to claim on claim benefit as well as preservation account. And finally, look at a few of the education and sensitization, as well as investigation of complaints when it comes to benefit payment. Please, you can move on to the introduction. As we might already in respect of administration of pension is the payment of benefit.
Hello, Mr. Papa.
Also outlines the functions, the specific functions that the authority ought to undertake in order to achieve these purposes. Yes, go ahead.
Yes, we can hardly hear you. So if you could speak up a little bit and maybe adjust yourself as well. The network seems to be a bit bad from your end. Thank you.
Yes, please. I can hear you. Randy, I can hear you. Okay. Is it okay now? Yeah, Randy.
Yes, it's better now. If you could speak up a little bit and then we can proceed. Thank you.
Is the sound okay?
Yes, it is.
Thank you. So I was on the introduction effective administration of pensions. And one of the activities that section outlines as the function of the authority is to ensure compliance with the Act. And again, to regulate the affairs of approved trustees and ensure that the trustee administer the registered scheme as required. Now, in the operations of the scheme, it starts from the onboarding of a member, that is taking biodata, enrolling someone. Then it moves on to receipt of contribution, that is contribution management. So you receive financial data, and then the money comes to you. That's invested. So when the money comes, you'd have to invest it so that you will enjoy some returns on this money for the contributors. Now, today, our session is dealing with the final aspect of the pensions structure, which is the benefit administration. And in fact, this is what measures the how well we've been able to manage the pension. Because when somebody comes to your office and you pay the fellow and the fellow is happy, he goes into the market and he sells it for you. So in looking at that, we will specifically look at what qualifies someone for benefit, how is the application done. Then the next thing that we will look at is the steps that it goes through in order for the payment to be done. And so for qualification for benefit, as members would know, the mandatory retirement age is 60. But before then, when you are 55 and for any reason you want to retire out because of the industry you find yourself, you have the right to retire, you can equally go on retirement. Again, we have people who might have immigrated to Ghana to work, and at a point they want to go back. Yes, the law allows for room for the processing of your benefit. The next aspect is when someone suffers any health condition or an accident that renders the fellow totally incapacitated, then you can equally do an application for that. Now, when it comes to survivors' benefits, so in the event someone dies, the beneficiaries of that individual would be able to also assess the benefit that has accrued to that individual. And in this context, in the tier 2 space, as well as in the tier 3 space, benefits can be paid as soon as someone dies and has nominated some representatives. Now, when it comes to the event where someone has not already nominated representative, like beneficiaries, the requirement is very stringent because that fellow must prove that he or she has the right to the accrued benefit. But in the event there is a nominated beneficiary, see in Regulation 128, you just need to prove that you are the one who ought to receive and trustee would equally pay you. The final aspect I want to talk about is the mortgage withdrawals. The law allows for that. When in the tier 2 space, you use it to secure your mortgage. In the tier 3 space, you can also use it to secure. And even when it becomes imminent that you have to withdraw, and it is really for a mortgage for a primary home, the law will allow you at no tax. Now, when benefit has accrued to you and you want to withdraw, you must put in an application. So the regulator at all times want to ensure that whoever has been paid a certain benefit out of any scheme would have put in an application. So one rule we do, especially when we go on site, is to inspect whether those who are being paid have actually applied for such benefits to be paid. And after you've actually applied with a form which the authority has given an approval to, you need to identify yourself so that the trustee would equally know that you are who you say you are. The next step has to do with the timelines for payment. So the authority in our role to ensure retirement income security ensures that schemes and trustees pay people who have gone on retirement and have put in an application or a claim on time. And so I will draw our attention to Regulation 132, which indicates the maximum limits that trustees ought to operate within in terms of, and so the authority ensures that no application goes beyond this particular maximum time that the law has allowed. I can say it on authority that most trustees are doing less than the maximum allowed, especially when you have attached all documents that ought to be attached in 3, 4, 5 days. Some trustees are able to pay, and I believe Enterprise is doing well in this angle. So for an application where there is no arrears, where all contributions have been paid, the law prescribes a 30-day turnaround time in which to pay. Now, in the event there is a small encumbrance, such as outstanding contributions, or there's anything that ought to be looked at before paying, the law maximum of 60 days, within which if the trustee ought to do any follow-up or any checks, they go ahead to do it and payment is actually done. Now, when this is done, then the processing of such an application goes through in the normal course of business. But when it comes to a few of the applications, such as unemployment benefit, permanent immigration, total incapacity, and mortgage, the authority has specific roles to play in the processing of these particular applications. So when you take unemployment, for instance, whoever is making the application should have gone to the labor department to be certified as unemployed based on their rules of certification. And when this certification is done, you would also need a letter from your employer to indicate that, yes, you are unemployed or you have been laid off. Then these documents would have to be sent to the authority for approval before any trustee can make payment. So specifically, when it comes to unemployment payment or benefit, the authority must approve. When it comes to permanent immigration, the same applies. You will need to take a statutory declaration that you are leaving the shores of the country and not coming back. And with that, the authority would give its approval before payment. Now, when someone has suffered an accident or any ailment that would not enable him or her to work again, you cannot do it by word of mouth. And so the law has prescribed that the authority facilitates a board that would declare you unfit for work based on the recommendation of a qualified medical personnel. And when that is done, you would be certified and an approval will be given for payment. The final aspect is the mortgage. Whichever mortgage application that comes for payment would have to be bounced off with the authority for approval. Now, let me talk about the right to claim, especially when we are dealing with people within the ages of 55 to 60. When you reach the age of retirement, the right to claim for the benefit accrues to you. But the law did not make it mandatory for you to come for your money because you are 60 years. And so you have the right to plan as to when you would want to take your money. You can equally even defer the collection of your money if you don't have any immediate use. And I believe that subsequent speakers might throw more light on some of the products that enterprise has that will enable this to be done. Now, if you look at this, more content, Regulation 137, 138, and 139 has given specific actions that ought to be taken. And for it to be done and for it to be supervised, the authority has a role that every quarter reports on these unclaimed benefits are submitted so that your funds will continue to be invested at the going rate. And anytime that you want to pick it, you can go ahead and pick it. In the event you move from one scheme to the other and you choose not to exercise your right of moving your funds or consolidating your funds, which we advise you do, you equally can leave your funds in the previous scheme, especially if it is a master trust or a group personal pension scheme. And in such events, the trustee is supposed to put these funds into what we call a preservation account, invest it at the going rate, and when time is due and you want to claim, you go ahead to. This contest to the trustee reports quarterly to the authority and questions of the scheme and the role of the authority when it comes to benefits. We also do education and sensitization on the benefits management. It's a lump sum. The law says that you can take all, but we educate people on planning towards this lump sum so that you will not pick the money before you think of what to do. And so when a forum like this is granted and you are being given the various avenues available to you to put your money into good use, it's a fantastic position, and we equally support that. Finally, in the operations of any human activity, there could be something that explain it to your satisfaction. You have the right to inform the authority and we will act on it appropriately. Let me conclude on summarizing our role in respect of the benefit administration process In as much as it is directly sitting with the trustee to process the benefit, we ensure that whoever applies for is duly qualified, and that then the individual duly applies with the form approved, and that timelines are adhered to. We also ensure that the processes of application follows the right approved format, and we encourage people to understand that rights to claim accrues to them, and to their funds will go into an unclaimed account and invested as such. And finally, the authority educates and sensitizes people and investigates all claims and all complaints that we receive in respect of benefit administration. And so in summary, these are the roles of the authority when it comes to the benefits administration. I've tried to make it as precise and concise. If there are any questions, we will take it as the meeting goes on. Thank you very much.
Thank you, Mr. Abuaji. Thank you, Mr. Abuaji, for taking us through the role the NPRA plays in the retirement planning process and how to assess your benefits. We are going to continue with our program, but just as a gentle reminder to put your questions in the comment section so that we address all of them during our Q&A session at the till end program. And also that we have a special a surprise for every single one of you on the call this morning. So kindly check in the comment section. There's a link on there. Click on the link and key in your phone number for a surprise, that for us to send you a surprise immediately after the program ends. So as you said, we will continue with our program, and we would like to invite the head of benefits at SNIT, the Social Security and National Insurance Trust, in the person of Mr. Joseph Poku, to take us through the process one needs to go through in accessing their retirement benefits. So Mr. Poku, if you're online, could you please take it over? Thank you. Apologies for that, ladies and gentlemen. We understand Mr. Poku is having some technical challenges, so we will jump on to the next presentation and then we'll come back to Mr. Poku right after that. So we would like to invite our Assistant General Manager in charge of operations, in the person of Hilda Owusu, to take us through the process for accessing Tier 2 retirement benefits here at Enterprise Trustees. So Hilda, if you're ready, the floor is yours.
Okay, good morning, everybody. Once again, welcome to our Retire Well, Retire in Style series. Just give me a few minutes while I try to project my presentation, please. Kindly confirm when you can see my presentation, please. Anyone? Ransford?
Yes, Hilda, we can see your slides.
Okay, great.
Can see your slides, but unfortunately we have Mr. Poku also sharing his at the moment. Would it be okay if we have him take
So I'll
the
put on
session?
my pieces and
He has
then
to leave us. Yes,
okay.
please. Apologies for that. Apologies. Hello, Mr. Poku. We are ready for you, sir.
Hello, good morning.
Good morning, sir.
I'm just hoping that everybody can hear me, at least.
Yes, we can hear you.
Okay, all right. So thank you for the opportunity. The topic is, as I got it, is how to assess your benefits as a retiree from SNET. And before I go ahead, I want to state that SNET has, the scheme has so many benefits for its members. We have the old age pension, which some people call the same as the superannuation. And that comes in two forms. You can retire before age 60. That is when you are 55 years and above, you can retire. But if you are 55 but less than 60 years, and that's what we call the reduced pension. And then we have the full pension, which is for those who have attained the age of 60 years and have made the minimum number of months of contribution to retire. So to start with, you need minimum of 180 months under those who are under Act 766. That's the law that is pertaining now. And I'm assuming our audience or our participants are all under Act 766. That's those who were born after 1st January 1960. So they are, by law, supposed to be under the new Act. So the new Act, you need a minimum of 180 months to qualify. And so the two conditions that make you qualify are the number of months of contribution, which minimum is the 180, and then the years, that's your age, that it should be 55 years or more. So let's say the person has made a minimum of 180 months and is 60 years or more. That person qualifies for full pension. So we are supposed to pay you full pension. How do you assess that pension? It's so simple and so easy. Now, all you need to do is to walk into any SNET branch and tell the person that, hey, I've retired. I'm 55 years or more, or let's say I'm 60 years, and I'm coming for my money. No problem. You don't need anything else. That's all you need. If you happen to have a retirement letter from your employer, that is good. In fact, that is what is required. But if you don't have it, it's not something we cannot process because you don't have a retirement letter. I want to make that clear. Because there are cases where employees have issues with their employer, and we don't want to make it possible for an employer to use the fact that there's a problem between him and the employee and punish the person and say, I'm not going to issue with a retirement letter. So that is why it's a bit flexible. Because when it comes to the benefits that you are supposed to get from SNET, it's between you, the member, and SNET, not the employer. So you can walk in anytime and get your money. So you walk into a branch and you tell the person that you are retired and you want to come for your money. All we need to do is to confirm that you are the person you say you are. You are the person that we have your records on our system, that we are supposed to pay you when it is due. And so when you show up and you say it is due, we only have to confirm that you are the one. How do we do that? That's internal process. So we take your thumbprint, which is by far the unique way of identifying people. So we take your thumbprints compared to what we have on our system, meaning that what we have captured years back when we were registered. Now, let me quickly say this. Back in the day when everybody was registering, we were doing that manually. So we're taking your thumbprints on the paper and storing them. And now we have biometric re-registration. So we expect every member to go through that biometric re-registration. That's what we call the re-enrollment. So before you assess your benefits, you must have gone through that re-enrollment. If you haven't, then you'll be taken through it before we go ahead and process your benefits. The re-enrollment is just to capture your fingerprints electronically so that in future, when you need to identify you, we'll be able to identify you electronically. That's basically what the re-enrollment is about. So it captures you. Once we identify you as a person that you are on our system, then we take your thumbprints or fingerprints, impressions, and store them according to the records we have. So that next time you show up, it will be easy to identify. So once you get to any branch, with or without your retirement letter, all we do is to identify and verify that you are the one who has been making contributions over the years into the SNIT account. And then we go ahead and take your fingerprints, compare with our record. If it says, yes, you are the one, that is the issue. I mean, that is the main issue that we need to cross. Once we do that, you should provide us with your bank detail. That is the name of your bank, the account number, and maybe the branch. These days, the branches really don't matter because it's almost every bank is universal. You can access your account and your funds from any branch of the bank, and sometimes electronically. So you need to provide your bank detail. If you have the retirement letter, you add that one to it, and then you show up at the branch for now. I'm saying for now because we are in the process of even digitalizing our operations in terms of application of your benefits, where we to get to a point, you may not need to walk to the branch to put in the application. You can do that from the comfort of your home or from your office, either from a laptop or maybe a phone or something like that. We are in that process, but we are not there yet, so let me not jump the gun. So for now, you need to show up at the branch with your bank detail, because at the end of the day, when we have gone through the process, the money has to hit the account. So that is also very important. Now, before you retire, because your benefits is going to be dependent on the number of months of contribution you have made into the scheme and the salaries that you were earning on which you were paying the Social Security contributions, it's important that you ensure that all the contributions are intact before you retire. So periodically we issue statements. In fact, the law says once every year, you should let the members know that these are the contributions your employers have paid on your behalf. And you need to confirm whether those contributions are okay and they are in line with the salaries that you were earning. So you make sure that before you retire, in fact, 3 months before retirement, you are even allowed, you can decide to put in your application. For us, we do all the paperwork to ensure that everything is intact. And so once you do that, then at the end of your retirement, let's say you retire at the end of August, then you can be assured that within 2 weeks, your pension will be lodged into your account. So for pensions, this is what you are supposed to do as a retiree. First of all, make sure that your employer pays and they pay appropriately according to the salaries that you are earning. And then there are no gaps in your statement. If there are gaps, you take steps to complete the gaps by coming to our office, showing your pay slip or whatever information you have that can aid us to fill the gaps for you with your employer. If they haven't paid, then we make sure that he pays and we bill him with penalty. And so for you, the employee or becoming the retiree, you make sure that your account is intact. That's your responsibility. And then you show up, because the law says you have to apply for your benefits before you are paid. So you show up at the branch with the information that I mentioned. That is the bank detail and then your thumbprints. That is all you need. And if you have a retirement letter, you add to it. This applies also to reduced pension beneficiaries. That is those who want to retire before age 60. There are some people who say, oh, I'm 55 years or 56 years, I'm tired. I just want to go and do my own job. I want to quit the formal employment. I mean, you are allowed to do so. The law provides that for that. So you just have to work in the same way. You'll be identified, provide your bank details, and we pay you. So that will be for the superannuation. Now, the second thing that we pay, the second benefit that we pay to our members or the members of the scheme is the invalidity pension. For the invalidity pension, it's a bit different from what I've just explained. For the invalidity pension, there are two conditions that you must satisfy. First, your medical doctor or your whoever is assessing you medically should determine that you are incapable of any gainful employment for the rest of your life. So that is the first certification. They have assessed you and realized that you are diagnosed with a certain ailment, whether physical or mental, which will prevent you from engaging in any active employment. Once that is done, you come to the SNIT office and try to lodge for your, make the complaint or lodge a claim for invalidity. Then the law says SNIT may have to constitute a medical team or a board, which is made up of represented 3 medical doctors, 1 from SNIT and 1 from two from the public fraternity. And they will constitute a board and examine you again with questions and all that to confirm or otherwise what your medical little, a severe headache. It has been going on for 1 month. You cannot work to sustain yourself. That is when you qualify. And that's one leg of it. The second leg of it is that you might have made a minimum of 12 months.
Apologies for the interruption, ladies and gentlemen. We seem to have lost our speaker, but we'll get him back very, very shortly. So just bear with us for a few seconds.
Hello?
Yes, Mr. Puku, we can hear you.
Okay, so the line dropped. All right. So as I was saying, the second condition is that you must have made a minimum of 12 months contribution within the last 36 months before the occurrence of the event. That's because before the occurrence of the invalidity. So for example, if you contributed for the last 3 years or you did not, but the ailment or the condition happened, and we go back and check the last 36 months and realize that, oh, you made a total or an aggregate of 12 months within the last 3 years before the occurrence, the event occurred, then together with the certification by the medical board, you qualify for invalidity pension. So once you qualify, age doesn't matter. It doesn't matter whether you are 25 years or 30 or 40 or 45. The system assumes that you are 60 years. As far as benefits is concerned. So it just gives you 60 years already as if you're on retirement. And then the number of months of contribution also doesn't matter once you meet the minimum 12 months. If you don't get the minimum 180 months, the scheme assumes that you have already made 180 months. So it gives you the 180 months and it gives you 60 years. It doesn't matter your age. It doesn't matter the number of months of contribution that you have made into the scheme. And then we use that to calculate your pension, just as we do for the regular pension for those who have attained the age of 60 years or 55 years and above. So that is how the invalidity pension is applied. If you want to assess the invalidity pension, I hope that nobody here will have to be in a situation where he has to assess invalidity pension. But in case it happens, these are the conditions. You must make a minimum of 12 months within the last 36 months before the occurrence of the invalidity. And then a board should confirm what your medical doctor is saying or otherwise. But if he confirms, then with the two conditions, that's all you need. Then you provide your bank detail and the money will be paid into your account within a shortest possible time. So that is the invalidity pension, how to assess it. The third one is the immigration benefits. And I believe we don't have a lot of people who are immigrating permanently. The condition is that you must have immigrated permanently from the country, or you are immigrating permanently. And that means you are a non-Ghanaian and you are leaving the country for the rest of, for good. This is what makes you qualify for immigration benefits. Now, two things. If you have made a minimum contribution that would have made you qualify for pension in Ghana, for example, the minimum 180 months before you immigrate, then we calculate the pension at the time that you were leaving, because you have made a minimum 180 months. Age doesn't matter here. I'm talking about the present law. And then if we arrive at the figure, then we assume that we're going to pay you that figure for the next 15 years. So you have a guarantee period for 15 years for that figure. And then we give you the present value. I don't know whether I'm clear. So for example, we calculate you have made a minimum of 180 months and you are leaving the country for good. Then we use the number of months of contribution you have made the best 3 years and calculate the pension the way we calculate for any other person. And arrive at a figure, say 1,000 cedis. That 1,000 cedis is supposed to be guaranteed. You are guaranteed that 1,000 cedis for the next 15 years, 180 months. But of course, because the next 15 years is in the future, we need to bring this value to date, to present, and then put all the amount together and pay you one time, and then you leave the country. Now, if you haven't made the minimum 180 months and you are leaving the country, then we just compute your contributions that you have made with interest, just like we pay anybody lump sum, old age lump sum, the person who doesn't qualify for pension. We pay the old age lump sum. We do the same thing and then calculate it with the prevailing TB rate, 75% of it, and then pay to you in bulk one time. So in both cases, you receive a one-time payment. It is not a pension. That is how you assess your immigration benefits. And again, you need to provide your bank detail where the money should be lodged. Now we made it even flexible and say that if you want the money to be paid into your foreign account, you can let us have that foreign account detail, but you are going to bear all the charges in the transaction. That is sending money through telex or through whatever means, through the bank. The conversion charges instead of forex charges, the interest rate, the conversion rate and all that. If there are any charges associated with that transfer of the funds, it will be deducted from your benefits, and then it's paid to you one time. So ladies and gentlemen, these are the benefits that are available to all our members of the scheme and how you'll be able to access those benefits. It's very easy. You don't need to go through any cumbersome process. No fees is charged for you to process anything. You don't even send pictures. Now you just appear and we take your pictures, your photo electronically, and then your fingerprints are also taken. The last one I'm going to talk about is the survivor's benefits. Now, we are all alive. as we speak. So that will not be applicable to us. It will rather be applicable to our beneficiaries, our people who depend on us, if you like, our dependents, or people we nominate, we validly nominate as our dependents. Now the catchword here is valid nomination. If we say valid nomination, we mean that nomination that are prescribed by law. Either you are part of the matrilineal system or matrilineal system. We have people that are called family members in our extended family. Your mother, father, brother, sister, auntie, and all that, cousins. They are all part of the family, in terms of those who are under the matrilineal system of inheritance. Then those are the people you can nominate. You cannot nominate your friend, you cannot nominate your dog, or say charity, I put it to this foundation. You cannot do that. It has to be people in their circle, in your family line, that you can nominate. In rare situations where there are adoptions or people are, become like a family, even though they are not blood related, and there are evidence to that, they can be nominated when it gets to court, the court can grant that. So that's what I mean by valid nominations. So you cannot nominate just anybody. Now, everybody is required to update his nominee list once every 5 years. That's what the law says, every member of the scheme. So once every 5 years, make sure that you update your records in terms of who the money should be paid to when you are not around. If I say when you're not around, you understand what I mean. When you're dead and gone, you don't want to leave any people fighting for your inheritance, as far as SNP benefits are concerned. So you are supposed to update your records once every 5 years. Walk into any SNP office, say this is my record. Even if you haven't made any change or you are not going to make any change, just go and list the same people that you listed the 5 years before, and that will be an update to your records, so that when you are not available, when you are not there, we fall on those people and pay the monies to them. Now, those beneficiaries, when it is due, let's say there's a death of a member, there are two forms of deaths. One is those who are on active payroll, active service, they are still working and they die before they retire, and those who have retired but are not age 75 yet and they die, as they die before age 75. For these two people, there are benefits to be paid to their beneficiaries. So quickly, because my time is running out, let me quickly mention that those who are active service, those who are in active service. If you die in active service, your beneficiaries, all they need to do, or your family members, first to report the death. You need to walk into a SNP office and report the death of the member. Reporting the death, you need to provide an evidence that the person is dead. So you can get a letter from the employer of that person, because the employer will know the person is dead and issue a letter. Yes, this person is so. They provide the date of death and then write in a letter form and you take it to SNP office. Or you get a death certificate from the Registrar General, or you get the burial certificate. That is just secondary evidence. We have primary and secondary evidence. So we need to provide the primary and maybe one supporting secondary evidence, like obituary and stuff like that. Those are secondary. It gets tricky because we have a lot of fraudulent cases, people pertaining to purported to be somebody else, and then trying to claim the benefits of the disease. And sometimes you have the disease himself who is not dead and is trying to, state that he's dead and try to get some money. It has all happened before. Anyway, that's another topic. So once you report the death, you need to provide evidence for the death, and then you leave it there. So there's many people who ask questions and about the family history, the relations of the person of the disease, and all that. Get as much information as possible from the reporter of death. And then we proceed to investigate. So we open the list, the beneficiary list I mentioned, and we say, okay, these are the people that are listed. Are they all validly nominated? So how do we know that? We need to go undertake investigations, identify each one of them, and see the relationship that the person had with the beneficiary, the deceased had with the beneficiary. Once that is done, and the person probably worked elsewhere, we need to investigate and see if there were issues. I mean, the person had an affair somewhere, had children somewhere that the family members didn't even know. We need to unearth that. Because if you pay, especially when kids are involved, minors are involved. And by minors, I mean those who are below 18 years. The law says that if the man has kids or children who are below 18 years, they should be taken care of first. They get 60% of the whole benefits, and the rest 40% is paid to the rest of the members. So we make sure that we identify every child available or every child that is involved. That is the work of SNITS. I'm not going to bore you with that. And once we establish that there are no people involved, all the people have been identified, and the family have confirmed that this is the only children that they have or the family relation that they have, then we go ahead and pay these beneficiaries. So again, once we finish with that part, which we call the reporting of debt part, then we come to the benefits part. So each identified beneficiary, they have to come to the branch office and identify himself again, like as if he's like a pensioner going and asking for the benefits. You provide an ID and a recognized ID, and then we see the pictures and everything, and then you provide your bank detail. And once we identify you as the one that the beneficiary nominated, and you are also investigated to confirm that the payment will be made to those beneficiaries. So, ladies and gentlemen, this is where I bring the end to the discussion, the presentation, in terms of how to assess your benefits and also how your beneficiaries will be able to assess your benefits when the Lord calls you. Thank you so much for your attention. I don't know whether I'm allowed to take questions now or it has to be at a later time. I'll be available to do so. Thank you.
Thank you, Mr. Poku. Since we have you for a very limited time, we would want to take a few questions that will be directed or
Excellent.
have been posted that will be directed straight to you. So
Excellent.
we'll just take a few. So, ladies and gentlemen, if you have any questions for SNIT, to kindly put them in the comment section so that we read them out for Mr. Poku. But we have a few so far. Nana Dixon would like you to kindly clarify what past credit is regarding the Tier 1 scheme. So if you could give us a bit more clarity on that. Thank you.
Even though I didn't talk about past credit, let me go ahead and mention it. Should I answer? I should wait for other questions.
No, please go ahead.
Okay. So before the inception of the Act 766, this current regime that we are in, a lot of people had made contributions under the old scheme. The old scheme is called the PNDC Law 247. And that's the law that governs the old scheme, which is still running, actually. So calculations, were done. Empirical evidence shows that the 25% lump sum, which was paid under the old scheme or is being paid under the old scheme, was equivalent to about 4% of the total contributions that members made in their lifetime. So 4% of their salary, that's what I mean. So their annual salary, if you take 4% every year, up to the time the person retires, it was equivalent to the 25% lump sum that they opted for when they wanted to take part of their pension or part of their benefits. So when the new law came into being, and those who were compulsorily put under this law, because if you were born from 1st January 1960, I'm talking about after the amendment, there was the law said 1st January 1955 coming, and then Act 83 amended it to 1960, 1st January 1960. So everybody born from 1st January 1960, you have no choice but to be under this new law, Act 766, as amended. So because the second law, the Act 766 doesn't pay a lump sum, which otherwise would have been available to those under PNDC Law 247, they thought it wise and said, okay, then let's compute the same 4% of their annual salary since they joined the scheme with interest and accumulate up to the December 2009, where the scheme ended, so supposedly, and the new one began from 1st January 2010. So that 4%, which is computed with 50% of Treasury bill rates that is prevailing every year, compounded annually up to December 2009, is what we call the past credit. It means it's something you earned because of the contributions you made in the old scheme prior to the beginning of the new scheme. That's what we call the past credit. So from December 2009, because you'll still be working up to date, for example, and you are retiring, let's say, this month, then we calculate interest on that past credit that we had as of December 2009 by accumulating 4% of your total salaries annually, and then with 50% interest rates prevailing up to December 2009. We now compute interest on that amount with 100% of Treasury bill rates compounded quarterly from January 2010 till the time that you retire. So what we do, and this was a modification a couple of 4 years ago, almost 5 years ago, that is that we should apply the 100% of TB rates. Just like you are invested, you have used your money to buy TB rates, you get full rates, and then you got that quarterly 91-day TB rate. It was in that line. So it's like the money that we computed as of December 2009, if we were to give to you at the time, and you were going to put in a Treasury bill rate or going to buy Treasury bill with it, it would have attracted full Treasury bill rates every 3 months. So that is what we do. So it's the same as you getting your money invested in Treasury bill. And that is the interest we calculate on the past credit. That itself is not the past credit. It's the interest we calculate on the past credit and add to the past credit as of December 2009. Now, let me quickly mention that we have been paying some monies in trenches for those who have been retiring. What is the difference is that we're using an old formula, which was agreed between Senate and MPI according to law, that they should agree on how to calculate, determine that actuarially. So they decided, Senate and MPI did that. And we're using 75% of Treasury bill rate from January 2010 till the day you retire to accumulate the interest on the past credit. So there was a discussion between the group, the forum, and other ID bodies, labor unions, and then we agreed on the 100% TB rates compounded quarterly from January 2010. So because our system was paying with a 75% TB rate from the time we started this 2010 until 2017, where this agreement was reached, and our new system, I mean, the system that we are having wasn't that flexible to accommodate the new formula or the new way of calculating the past credits. We pay the first tranche, which uses the old formula. That's a 75% of TB rates compounded annually. That is what is paid to you when you retire now. And then a month after, we use a new formula compounded quarterly 100% from January 2010 to compute and then pay you the difference between what we pay you when you retired and what you're supposed to collect. And that is the second tranche that has been paid to members. I hope I'm clear with the explanation.
Yes, Mr. Boku. Yeah,
Okay.
you're very clear. So just we'll take 2 more questions. Charles Kweku James is asking what age SNET ceases to pay a person's pension benefits, and then Isaac Ban also wants to know what happens to the benefit of those who qualify for lump sum payment under the old law before the new law in 2010.
Okay, so the first one, I heard something yesterday on radio, and I was amazed. I didn't hear well. There was a presentation going on. Somehow I thought it was from this forum, and if I heard correctly, the presenter was like, "So what happens to you after? What pension are you going to get after age 75?" So my understanding was that as if the pension will end after age 75. Because we say that you are guaranteed pension from age 60 to 75 under this law, under Act 766. No, it doesn't end. The good thing is that once you ensure your retirement, By ensuring your retirement is just paying the contributions, employer and yourself paying contribution while you work. That's an insurance. It's a premium you're paying. The contributions are premiums. You are ensuring your pension for life. Those premiums that you are paying from the day you join the scheme to the day you retire will guarantee you pension for the rest of your life, whether you're 100 years, 120 years. But everybody is guaranteed 15 years. What it means is that whether you live or die, that 15 years pension belongs to you. So if you die before age 75, as I mentioned, but I even forgot, I didn't talk about those who are retired and died before 75. For those people, the difference, which you call the unexpired pension, because you are guaranteed that 15 years pension, and you live for only 5 years after retirement, let's say you died at age 65, it means you have 10 years unexpired pension to collect. And that is what is calculated and paid to your beneficiaries for those who die before age 75. Now, if you die after age 75, that is where we don't pay anybody because you have exhausted your guaranteed pension. I hope I'm clear. So the 15 years is for every individual who belongs to the scheme. Once you retire at age 60, you are guaranteed 15 years. Whether you live or die, it is yours. But if you live beyond the 15 years, you are paid for life. So this is the only institution that does that. That can say, I'm going to pay you till you die if you pay these premiums. That's why sometimes we say the scheme is very generous and it's good for everybody to join, contrary to what we hear outside, because, of course, they probably wouldn't know the detail. So it is not right to say that once you are 75 years, you lose everything. No. As we speak, we have people on our payroll who are 90 plus. 90 years plus, we still pay them. And they will pay them till the Almighty God calls them. So it is guaranteed. So nobody should fear anything that once I'm going to stop or something. It doesn't stop. We pay you till you die. But if you die before 75, then your beneficiaries will get the rest. That's what it is. Now, the second point is what happens to the lump sum. It says
yes, the benefits of those who qualified for lump sum payment under the new law before the old law, before the new law came to place in 2010.
Good. So the lump sum payment, old age lump sum, there are two lump sums. We have lump sum as 25% lump sum, where you had the option under PNC law 247, as I talked about, to take 25% lump sum when we're going to pay you. And then we have old age lump sum for those who don't qualify for pension by virtue of the number of months of contribution that they made. You need two things to qualify, as I said, the number of months of contribution and then the age. Somebody will qualify by age, but will not qualify by number of months. If you don't meet the minimum 180 months, but you are 55 years and above, you don't qualify for pension. You qualify for a lump sum payment. In that case, we compute all the contributions that you have made with interest, and that this current law says 75% of TB rate should be applied as an interest and compounded annually and paid to you one time. So you get one-time payment as lump sum. The same way under the old law, PNC law 247. If you don't qualify for pension, that is, if you don't contribute for a minimum of 240 months, and you're not 55 years and above, if you are 55 years and above, and you don't qualify, you don't contribute for 240 months, you don't qualify for pension, but you qualify for lump sum. So we compute again with all the contributions that you have made with 50%, that time it was 50% of the TB rates prevailing every year. That's the interest rate that we use to compute your lump sum. The interest on the contributions, accumulate them, compound them up to the time that you are retired, and then paid to you one time. So it hasn't changed. The fact that if you belong to the old scheme, that is, if you were born before 1960, 1st January 1960, it means you belong to the old scheme. The good thing is that for those who belong to the old scheme, who were born between 1955 and 1960, because of the Amendment Act 883, that's brought them back to the old scheme. They still have the option to join the new scheme. So for those who couldn't make the 240 months under the old scheme, let's say they made 200 months under the old scheme, but they were born after 1955, but before 1960. under the old scheme, you wouldn't qualify for pension because you made 200 months. You need 240 to qualify. But you can opt to join the new scheme, which needs only 180 months to qualify for pension. And so when you opt, then you will qualify with your 200 months under the new scheme. So instead of getting a lump sum payment under the old scheme, because you wouldn't qualify for pension, you can get a pension under the new scheme because you exceeded the 180 months. I don't know whether that explains it to the person.
Yes, Mr. President. So the very last question would be on your reference to the T-bill rate. So Frank Kwachi wants to know if it's the 91-day, the 182, or the 1-year T-bill rates that State is referring to.
It's a 91-day T-bill rate. Government of Ghana 91 days. Yes.
Great. Thank you very much then.
You're
so
welcome.
Mr. Poku, thank you very much for your time. Ladies and gentlemen, thank you.
So am I permitted to leave?
Yes, sir.
Thank you so much for your attention. It's been good having this interaction with you, and I hope people will learn a lot from it. Thank you, everybody.
Thank you very much for your time. Okay, so ladies and gentlemen, our program still continues. Please remember to put your comments in the comment section, as we said. So when we get to the question and answer section, we will address all of them. And also for the surprise, we noticed people were putting their phone numbers in the comment section. No, there is a link in there. So my colleague Perry is going to post the link again one more time. So click on that link and then key in your phone number after you click that link. Okay, thank you very much. So we'll continue with our program. We are going to have a short presentation on the process of assessing Tier 2 benefits from our Assistant General Manager, Hilda Owusu. So Hilda, if you're ready.
Okay.
We can see your screen.
Confirm.
Yes.
You can see my screen. Good morning, everybody. It's our pleasure to have you with us this morning. We appreciate you taking time off your busy schedules to join our Plan Well Retire in Style Series 1. My presentation is going to be very brief this morning. Doreen, it looks like I am having issues today too with the presentation. Okay, great. I think it's okay now. Okay, so I'll just delve into my presentation. So the purpose of the Plan Well Retire in Style series is to work at preparing our retirees towards their time after their work life, and also to provide our prospective retirees with adequate information on pending retirement. It's also to ensure that our prospective retirees have a quick and easy access to their benefits when the benefits fall due. In the process, our role as corporate trustees, apart from ensuring that the investments are done and we ensure that you get competitive returns, some of the things that we do to ensure that you have a seamless experience is to ensure, for instance, that you are notified prior to your 60th birthday. So we do a few notices from when you turn 50, 55, and then in your 60th year, we do some when 6 months prior to your retirement, and then on your 60th birthday, all in an attempt to ensure that you are properly prepared to go on retirement. We also ensure that you have access to your benefit statement prior to going on retirement. There are a few things that it's important for you to know to be able to access your retirement benefit statement. So we'll go through that as the presentation goes on. The other thing we do is to manage and ensure that members' accounts, members are constantly engaged through our relationship management framework, and our employers are properly engaged and ensure that members' data is up to date as much as possible when it comes to the account statements, the contributions that are supposed to go through. So those engagements are constantly ongoing, and we do that in collaboration with the NPRA sometimes when the contributions have stayed unpaid for a long time. We also ensure that members have an idea of which documents are required for processing the benefits. So for our members who are going on retirement this year, for instance, what we are doing is that we are calling them, engaging them, trying to understand if they are aware what documents are required for them to come for the benefits, have they checked on their statement to ensure that their statements are up to date, so that if there are some reconciliation gaps, we try and get them resolved before the retirement benefit falls due. We also work on ensuring that members going on retirement receive their TPFA. This is something we work together with the NPRA and a third party that has been appointed to support the industry to ensure that members receive their TPFA. So that's an ongoing conversation we have together with employers, because we need to ensure that the data is quite clean, and then when we go for the information from the third party, we don't face any challenge. We also coordinate with the employers to ensure that members' benefit statements are up to date. We also ensure that employers who have defaulted, we've spoken about that, are followed up on, and we engage with the NPRA to ensure that the payments are made and data is received for members' contributions be brought up to date. And finally, when the benefits fall due and we receive your benefit payment request, we process the benefits. There are a few frequently asked questions around retirement benefits. Some of our colleagues and the speakers have touched on that, so I'll quickly go through that and then move on quickly so that we don't spend too much time. So our colleague from SNIT indicated at which points in time a member may come for retirement. The mandatory retirement age of 60 years is a time when you can come for your benefits. Voluntary retirement also starts at 55 years. There's a process we take you through, and we'll detail the process when you want to go on voluntary retirement and take you through the process and pay your benefits. There's also opportunity for people to come for unemployment retirement when you have become unemployed and you don't have any source of income. Then that's also an opportunity for you to access your benefit. Death is another instance where members come for their benefit. That has been touched on by our colleague from SNIT. Total incapacity has also been touched on, permanent immigration, and then withdrawals on tier 3 are also allowed based on the vesting rules of your particular employer. Every employer has a different vesting rule for their employees. What do you retire with? For tier 2, you retire with a lump sum value that constitutes your total contributions and investment returns over the time that your account has stayed with us. And the other question is that, how do I make a benefit payment request? We just complete our forms. You can either complete them physically, but we encourage that you download our forms online, or there's even an opportunity for you to complete your forms online, and then we pick it up and follow up and make sure that we take you through the process. We attach a valid ID, HR sign-off. The HR sign-off is important for all other benefits apart from the mandatory retirement, as our colleague from SNIT indicated. If your HR doesn't sign off on your form and you've gone on retirement, we don't need your HR to particularly sign off your form before we pay. So you submit the form through your HR. That's something we encourage. But if that's an option you don't want to exercise, that's also okay with us if it's a retirement benefit. But for all the other kinds of benefits, we go through the HR to make the benefits available to the beneficiaries. So the tier 2 and tier 3 retirement benefit process, what is it exactly? But before we get into that, we want to emphasize the importance of ensuring that as a member who is preparing to go on retirement, that you ensure that you monitor your account closely. In the most idealist instance, we expect that employers pay their contributions and make sure that data that is required to make sure that your account is updated is provided to ensure that your account is constantly up to date. But that doesn't happen always. So it also falls on the member to ensure that you are constantly checking and monitoring your account. You monitor your account regularly to make sure that for the months that you are receiving your salaries, your contributions are also being received. The other thing is to ensure to update your personal information. We allow our members to update their personal information anytime they want, because children are being born all the time. People's statuses are changing. Somebody may have divorced and remarried. So anytime you want to update your personal information, you can just log onto our online platforms or just send us an email. We'll pick up the request and get it resolved. It's critically important to ensure that your beneficiary information is constantly updated. We have several experiences of members who have passed away, and then the benefit process for the surviving beneficiaries is tedious. They have to go to the court to get letters of admin or probate. And sometimes through that process, you realize that there's no guarantee that the people who really deserve the benefits are the ones receiving it, because we pay to the administrator's account and say that because the family has appointed the administrator, we are expecting that the administrator does the right thing and ensures that the people who deserve the benefits receive it, but we cannot be 100%. So to be sure that in your absence, the right people receive your benefit, the benefits, kindly ensure that we have your beneficiaries and then it's constantly updated. Finally, our colleague from NPRA indicated that it's advisable that you consolidate your pensions account and your pensions fund. If you have worked in several places and perhaps you have 3 different pensions accounts with 3 different corporate trustees on the market, we'll encourage that you try and consolidate it, or else on retirement, what will happen is that you have to process your benefit from SNIT and then from 3 other institutions. So in as much as possible, let's try to ensure that we consolidate your account with your most current trustee. However, yeah, with your most current trustee. So the question is that how do you get onto our online platform to ensure that you are constantly updating your account? You can easily go to the link provided. We'll share this particular information in the chat platform. Click on member login. You notice that the member login logo is here. When you click on member login, if you are a returning member, you just sign in and get onto the account and view your statement and monitor what is going on. If you're a new person on the platform, then you have to go through the registration process. And the question is that for a new member, how do you register? So after logging in and clicking on the registration icon, you complete the fields that have been provided. Click on register now, and remember to keep your password private. Don't share your password. When you are done doing that, an activation code will be sent to your provider's cell phone number if the cell phone number matches what is on our database. If it is not on our database, you will not receive the code. So then you would have to click on account recovery and follow the instructions and then recover your login information. Once you receive the activation code, enter the code, and then once your account is activated, you will be able to key in your cell phone number and your password, select the account you want to view, and then typically when you enter our platform and you select the account you want to view, this is what you would see. You will see such a statement. You see your name, you see your member number as pertains to us, you see your employer name, your employer ID, you see your contributions, you see your returns and the total closing balance. So if you see where my cursor is, you will be able to see when each of your contributions were received from the time you were employed up till now. So the trick is to ensure that you check, has January been allocated? Is February there? Is March there? Is April there? Is June there? The moment you find that April is not there, then that's a red flag. You need to engage with your employer or send us an email on our customer service email at info.trustees@enterprisegroup.com.gh. We'll pick it up, follow up on it. if it's an outstanding information or payment from your employer, we'll follow up on that and try and bridge the gap while we are preparing you to go on retirement. You can also get some brief information on our USSD platform, and that is the code *714*333#. So when you do that, what's the process for accessing the information? When you dial that, you can select option 2 for your account, enter your PIN, enter 1 to use your current phone number if it is linked to your account, or enter another phone number. Then you enter your date of birth, enter a 4-digit PIN. This is a registration process so that every time we come back next time, you can view your account information. So right now that we have looked at how you can monitor your account and ensure that your account is up to date, let me just put a caveat on the information on the USSD platform. The USSD platform gives you information on a few months. It doesn't give you detailed information from when you joined. So it will give you an update of, say, the last 4 or 5 months. But if you want a real detailed statement, we encourage that you register online on our online platform and view the details of the statement and do your reconciliation and raise your questions through our call center or through our customer service email. So to process your benefit, the first step is that you obviously will send you your 60th birthday notice that it's your birthday, happy birthday, retirement is now. We congratulate you on your retirement, and now you can process your benefit with us. So what then happens is that you complete the form either online, or if you prefer, complete it physically, and then share it with your HR to sign it off, and then submit the information to us. Number 3, forms and accounts are reviewed. So as you have been checking on your statement over time to make sure it is up to date, when it reaches us, we also do a reconciliation to make sure that your contributions are up to date. So if the contributions are not up to date, we'll try, what we do is to follow up with the employer to make sure that bring in the contributions, let's make sure that the account is up to date. And then when we are satisfied that we have a full account for the retiree, then we start the benefit payment process for the member. When the benefit is processed and approved, you receive an SMS, and then within 3 working days, you receive your benefits in your account. This process works best when all payments as well as all allocations are up to date. So the efforts of checking on your statements and our review and reconciliation process when we receive your benefit payment is all to ensure that when we receive it, we can quickly process it. And then the moment you receive your SMS, it means that in 3 days' time, you can receive your benefits in your account, all things being equal. We would like to introduce to you a product we put together especially for retirees, because we understand that when members are going on retirement, some members receive a lump sum, and sometimes members may not have a plan towards it. So what you find is that members take receipt of their benefits, and suddenly there are a lot of family responsibilities. Sometimes there are a lot of funerals, and before you realize you're doing funeral contributions, you're paying something for some, and before you realize the fund is gone. So in order to support our retirees towards ensuring that they are able to manage their lump sum retirement fund, we put together a product under our personal pensions product, under Tier 3. That's supposed to support retirees to manage their, their pensions fund post-retirement. So what does the product do? What it does is that it moves the fund into what we call our Purple Drawdown Solution, PDD for short. And retirees then can be able to access their funds on a monthly, quarterly, yearly basis, or at a chosen rate. While choosing the rate and the frequency at which you want to access the benefits, it's important to take a good view of your total fund and probably how long you want it to last, because this is a drawdown. In as much as we are investing the fund, the rate, if the rate at which you are drawing down is faster than the rate at which the fund is growing, obviously your fund will run out quickly. So if, for instance, you have 100,000 CDs on your account, 500,000 CDs or 1 million CDs on account, then you can sit down with you and plan, okay, I want it to last so many months, or I want it towards a certain intent. So I'd want to say come for 1,000 CDs a month, 2,000 CDs a month to ensure that I'm able to meet my responsibilities and my upkeep on a month-on-month basis. Then we can plan with you. And then when that is done, on the 25th of every month, what happens is that it hits your account and then you can have access to the fund from the Purple drawdown product. So the question is that how can you get in touch with us? Even when you go on retirement, it's not as if you've come for your total fund and you have your PDD with us. You can still contact us. But for members who are now preparing towards retirement, these are our channels for engagement. Our website address, myenterprisegroup.io, our mobile app. You can also download the Enterprise Group mobile app from the App Store or from Play Store. And the advantage the mobile app gives to you is that if you have products across the Enterprise Group, Enterprise Trustees, Enterprise Life, Enterprise Insurance, transitions, you can have access to all of the products at one stop. So you log in at one go with the login process I initially shared with you. When you log in, you're able to see all your products, check on your accounts. Is my motor insurance up to date? My home content insurance, my mortgage insurance, my pensions, my life insurance, everything is on one solution. So you can take advantage of that and download the application to have access to that. We currently now have our web app as well, also acts like the mobile app. You can have access to all of our subsidiaries. I've spoken about our USSD platform. We also have a complaints desk at Enterprise Trustees, and the email address to the complaints desk is complaints.trustees@myenterprisegroup.io. If you have any concerns, any complaints, any worries, anything that hasn't gone well during your retirement benefit process, you can easily send an email to here, and then we'll pick it up and then follow up to make sure that whichever hitches you are following through, we quickly resolve it for you. But for our normal customer service, email enquiries on issues, or you're following up to reconcile your account to make sure that you are properly prepared for retirement, you can send an email to info.trustees@myenterprisegroup.io. We also now have BABs on WhatsApp. BABs on WhatsApp for Business means that you can easily chat with us on WhatsApp for Business with the number that is shown on the screen, 055-5400-1924. And if you save that number, that means that going forward, you can easily chat with us, and BABs will help you to solve your problems. And then finally, you can also reach us on our call center on the numbers that have been displayed. So in a nutshell, that is my short presentation. I'll hand over to Ransford now. Thank you very much.
Thank you very much, Hilda, for that very concise presentation. Members, ladies and gentlemen, just a gentle reminder to continue to put our questions in the chat area. We are almost at our Q&A session so that we can address them. Okay, so we'd like to continue with our last presentation. We realized that retirement planning goes beyond just the financial planning part of it, but there's also the social planning, there's also the health planning, all entailed in there. So we like to include all those angles in sessions as this that we organize from time to time. So to help us with the health planning part of the retirement planning would be our health consultant and business integration manager with Acacia Health, Dr. Papani, to take us through a very short presentation. So Dr. Papani, if you're ready.
Okay, thank you, Ransford. And just a second. Yeah, So good morning, ladies and gentlemen. I thought I would just show my face for a second here. My name is Dr. Papani Maliachi, and I'm actually learning a lot from this session. And I hope that at least my session also gives you the chance to also get some information as well from me. But it's been really insightful so far. My presentation today is going to be on health. And as Ransford rightly said, we're talking a lot about what we can earn and what we can get. But then the point of it is the Bible always talks about what would it profit you at the end of the day if you earn all of that and you actually lose your soul. So it's really interesting that we're talking about that, and it's important that we actually consider the health elements of all of this. Please let me know. I'm trying to share my screen. Please let me know if you can see my screen, and please let me know if you can see a single slide. Ransford, please help me out here.
Yes, Papani, we can see your slides.
You can see my slides. Okay, so the background behind this, like I was saying, we're all of us here, all of us here are at some point in time closer to our retirement ages, some closer, some less closer. But then imagine what happens if you reach the age of 60, right? You're debt free, you have all the money you can pay, you can use to do anything you want to do. But then all of a sudden, that's when you realize and you remember that I had this health problem that I never really took seriously. I didn't really do anything about. And then all of a sudden you realize you have to now spend a lot of this money, a lot of these payments that have been given you, whether they are PDDs or whether they are lump sum payments or whether they are monthly payments, whatever it is, you have to spend all of that money now taking care of your health. What do you do in a situation like that? And really, you're not alone if you're thinking along those lines, so you probably pause to reflect. Most of the time, people actually retire without thinking about how health impacts what happens after they retire, especially because maybe right now you're on a specific health policy with your company. So you don't think about the fact that all of a sudden you're not going to have to pay out of pocket for health. So you have to ask yourself this question at times, like, what's the benefit of getting a huge well-earned payout at the end of the career only to turn around and reinvest it in keeping you barely alive or just alive enough to be able to enjoy what's left? I hope that today's presentation will give us some kind of context and help us look beyond that point and start preparing ourselves from a health perspective. So at least what we can say when it gets to our retirement time is what I was saying, that goodbye tension, hello pension. So today my presentation briefly will cover 4 specific areas, more or less just an overview of what health is, what some of these causes of ill health concerns can possibly be, what are some of the risks and complications, and then a few preventive guidelines if we can. So fundamentally, the definition of health means it's given by WHO as a state of complete physical, mental, and social well-being that's not merely the absence of infirmity. Long story short, you don't have to be visibly sick to be unhealthy. So if you think you're walking, oh, I'm fine, I'm cool, you don't know what's happening within you, because there are lots of these medical conditions that are there and are building themselves up and waiting for the point in time that you're close to retirement or you at retirement so that they also enjoy your pension benefits, if you think about it that way. But generally, health events, like I was saying, they tend to be more common in retirees. One, because we don't necessarily have the access to the healthcare facilities and things and the healthcare packages that we had before. And also they are as a result of things that we have done over the period. The good news is it doesn't affect everybody. It's no guarantee that once you hit 60, you're going to have a medical problem. There are people who will never have any serious medical problems at all. And at times they're due to many factors, and they can be positive or negative. So it's very interesting to say what's a negative and a positive health concern. But once in a while, some of these things can indicate something else that could be worse, and then you could catch it, and it would help you prevent something else later on in your life. So that's how we look at it as a positive, from a positive perspective. So generally, when we look at diseases as well, we can have them being formed from different sources. I could say it could be things we are born with, or it could be things that come as a result of certain processes that go on in our body, or even as we age and change. So everybody's going to get older, everybody's going to change, and that in itself presents itself as a risk factor for certain healthcare concerns, and then also lifestyle issues. you would notice in the previous slide that what I was saying was that some of these things like nature and the more natural ones in the processes, these are things that maybe we can't necessarily control. However, there are certain elements that we can actually control and prevent. So we must try to focus on those ones, the ones that we can work on right now, and work towards making sure that we live a healthy and happy life as we live now and going also into our retirements. So what are some of these causes, general causes that could end up leading us to some of these healthcare concerns? I'll start with work. Generally, when we're old, when we're younger, we feel we are super, we can do anything in this world. We're interested in climbing the corporate ladder and getting to a point where we're actually, we've reached that point of self-actualization. We can build or buy our own house or houses. We can pay all our children's school fees. We aspire for a certain greatness. And we aspire for a certain goal. Usually that goal is a little elusive because really, whenever you get to a specific point, Maslow's law kicks in and you want more. So you keep trying to push this. And that's what happens as well. And it's not just us, but it's also the demands of the environment in which we work. So all of a sudden you realize you want to increase your productivity. You're not focused on being well because in your mind, oh, we will sleep tomorrow. There's a guy saying about what do you call it? When you sleep, when you die is when you sleep. So you think you don't focus too much on your health right now because you really want to focus on your productivity. As a result of that, you don't value the time you have right now. We don't spend a lot of time looking at how we can manage ourselves, go to the hospital, go for regular checkups, take time off just to go on leave. It's a hard thing because hey, if I go on leave, one, it's possible by the time I come back, I will not be relevant in the company, or there's somebody who's chasing me down if I don't stay here and make sure that this person doesn't come up to where I get to. All of these things can burn. And then your own personal goals. You're of the opinion that when I finally reach the point of achievement, then I can rest. And the reality of it is it's usually a moving target. We will never really fully achieve that point of contentment until we decide to draw the line. And then we look at stress. And the thing about stress is that it has different impacts on our body. I'll start from the bottom. It's in itself could be a good thing. When you have to work under pressure, that's when your mind kicks in, your adrenaline kicks in, your hormones actually help you become as productive and as functional. But that's when you have what I would call positive stress. When it's more negative and it has a negative impact on you, then you realize it begins to reduce your immunity and even your cardiovascular activity. So even though right now we're in the period of COVID, and we know most of the time we're talking about the people who are most affected by COVID, those who have immunocompromised states and those who have existing conditions. Newsflash, even your stress at work reduces your ability to resist your ability of your body to fight the condition that you're going through. So even with something like COVID, something as simple as COVID, I should say, your immunity is dropped because of stress, and that in itself makes it easier for you to contract it and possibly the other complications of that condition. Stress affects your ability to eat, drink, sleep, and exercise, and it causes a lot of anxiety and depression. And then somehow you don't realize it, but it also affects your work. So it's a funny thing. Your work causes the stress, which affects your work. So if you think about it that way, you realize, I shouldn't probably be doing it. I should probably be finding a way to manage my stress at work as well. Then we come to lifestyle. And these are the things you do whether or not you're at work. And these days, we have a much more younger population of workers who are either privately employed, self-employed, or are working for companies. And everybody is so driven. So most of the time, these lifestyle issues tend to affect more or less the younger generations. But the point is the younger generations don't stay young. And if you start a habit when you're young, you're more likely to continue it at this point. So some people will be in middle age, post-middle age. Some of these things will actually even look familiar to you, like smoking, alcohol, having a bad diet, obesity, lack of exercise, stress appears again. And then recently, the use of illicit drugs. People are finding ways to manage their stresses by what we call chemical escapism. They want to escape into places that make them feel better for a second or a minute or two. So all of a sudden, people are using drugs. And it's funny, it's no longer just the people of low socioeconomic status. It's actually those who are in the higher echelons of life who are now indulging in these drugs, these illicit drug uses. And it's beginning to affect people in different stages of their lives. Problem is, you may not notice it today, but ultimately it can actually affect you as an individual today, and it can affect you and your family and your children and everybody around you in the long term. So having looked at these factors now, what are some of the risks and complications that you are likely to face as a result of this? This is just more or less a snapshot, but generally it falls usually within these main categories. One, your risk of hypertension is increased if you are not managing yourself and managing your diet and your exercise and your time properly. Once you have hypertension, diabetes is usually not far behind. So once you start treating you for hypertension, you start looking out for diabetes and vice versa. Also, your risk of cholesterol issues because of the kind of diet that you will be taking. Generally, cholesterol issues actually precipitates the next item on the list, which is your risk of heart attack. So if you're watching your diet and you're doing your exercises, your risk of heart attack is actually reduced. That also, and your risk of stroke, which is virtually more or less a blood vessel problem that occurs in your brain. All of these things that you see over here could potentially cause death or debilitating injury and affect your ability to live a healthy, happy life from that perspective. You are also likely to have joint and bone changes. Now, this happens as a result of aging. But if you do not take care of your joints and your bones when you are younger, you feel the effects of these problems more as an older person. So your posture, your ability to sit well, your ability to exercise, if you're not doing any of that, your bones and your joints actually wear down faster than somebody who's really, who's exercising a bit, who's living a healthy life, who's eating well and eating the things that help their bones. Cancer is one of the things that can easily creep up on you. Some of these cancer causes can be hereditary. You could find them in your family already. And that in itself means that you need to be very much on the lookout for it. But some of these other cancer causes are more or less lifestyle related. Some of the foods and the drinks we take today actually precipitate our risk for certain cancers tomorrow. I don't want to scare you so much, so we would move straight into prevention and ask ourselves, what exactly can we do to help prevent ourselves? The same way Ransford said many times in the video, the time to start preparing for your pension and retirement is now. It's the same thing with health. It's never too late to start preparing for health. So the first thing one would say is live a healthy lifestyle. I mean, avoid the things that have long-term negative effects and things on you. Try to focus on more healthy things and try to live a much more fulfilling life. Try to make time for yourself. But then let's just go through some of these lists. So you know that medical checkup that you've always postponed because there was this particular target you needed to meet, it's going to creep up on you later on in life. So why not just do the checks now? Some companies have policies where they do annual checkups for everybody. But if your company doesn't have one, make it a point to put something aside to do an annual medical checkup, just to make sure, hey, I'm ready to face the next year and I'm not likely to have some problems. So do something like that. Invest in getting yourself regularly checked up. And if you have any problems, don't be afraid to go to a hospital. Where you can, sign up on a health plan. I mean, there's national health insurance, there's different private health solutions. And this over here really is a shameless plug from me and from myself and my subsidiary, which as well is an enterprise subsidiary. So we offer health insurance solutions as well for corporate entities. At this point in time, we're looking at other avenues in which to offer health insurance policies to private clients and also for post-retirement options. So these are things that we are looking at, and we intend to meet you at that point as soon as we can, as soon as practicable. Exercise is something I always keep saying. We can never over-exercise, and really exercise can just be a 20-minute brisk walk in your area. Nobody says go to the gym. Nobody says you have to run 100 meters in 9.5 seconds. You just have to do something, at least dedicate 20 to 30 minutes of your day, 3 to 4 times a week, just to do something that isn't sitting down or lying down, right? Or meeting a target. Give yourself some time for yourself. And I'm talking about eating healthy. Normally we would put a picture of something that looks not like what it is, but let's be honest, this is Africa. We eat things like fufu and jollof and yam. Why would I put a picture of something else that isn't relevant to us? Fufu is healthy if we eat it properly and if we eat it in sensible proportions. So it's not really a matter of what it is as compared to the portions of what it is. When you can, also try and put some money aside, even if there are no options right now, put some money aside also for saving towards your health. If it's part of your pension that you want to dedicate as some kind of a savings for health. There's nothing wrong with that. I would actually applaud that if you were able to do that. Other things you can do, like I spoke about, avoiding some of the negative things that have, some of the things that have long-term negative effects. It's really cool to smoke any substance right now. Your friends are doing it, your colleagues are doing it. Hey, it's nice. But at the end of the day, you don't realize what it does to you tomorrow. I spoke about food before in the context of everything we eat, but then also we need to start eating what we refer to as more organic foods and cut down on the cheaper processed foods. Indomie and Check, they're nice. They are really nice for a short period of time, but then they should not be our staple diets. I know it's easier to go to work and say, I want my packed food, I want my packed jollof. I mean, it's nice, but some of these things tend to have certain chemicals that make the food taste attractive and taste nice for you, but could potentially have long-term effects on you and your health. So try to cut down, try to eat more fruits and vegetables in addition. You see, I've put meat in the picture, so I'm not saying that stop eating meat, but it's fruits, vegetables, more healthy foods and more healthy things in fiber as well. And then use that to try and help yourself maintain a healthy weight. So again, it comes back to the exercising that we were talking about before. Another thing I want to add is that in as much as you're looking towards and you're planning towards your pensions and your own retirement, remember that your family is relying on you. And as a result, your family has to be involved in this management and in your own management of your health. They say what a problem shared is a problem halved. So try to get some family support. Don't keep your health issues away from them. Don't hide your conditions from them, because there's only one God and it is not you. I'm sorry. So the point is, you are as vulnerable as much as they see you as a leader and as a champion in their house. They also need to know that you are also mortal, but at the same time, you can inspire them to be healthy and to be great in spite of the challenges. So try and involve your family. Don't hide them. Don't hide those issues. Your personal issues are collective family issues, and you'll be surprised the kind of help they will be able to provide for you. Finally, and I haven't stressed this enough, take care of your mental health. We live in a world where right now people are really stressed. People are going through a lot of pressure. COVID and its concerns have even caused many issues for all of us right now. Having to work from home, all of these things play a very important role in affecting our mental health. So let's try and make sure we take time off. There's a time for everything, and just focus on getting better, both mentally and physically. Ladies and gentlemen, thank you so much. I hope I've been able to meet my 20-minute time limit here, Ransford, and I'm open to any questions, but I would just say your major advantage is your health right now, and then everything else will follow. So thank you very much, and enjoy the rest of the program.
Thank you very much, Papani. Thank you. That was very, very insightful. So, ladies and gentlemen, we have come to our Q&A section of our program. So we would like to take the questions that we have in the comment section. And yes, once again, if you still have some more questions that you want to ask, we still have our panelists here with us. So kindly put them in the comment section, and then we will address them. Papani, the first question actually goes to you, coincidentally. So Charles Kweku James is asking if we can have a medical pension scheme introduced for retirees, especially using parts of their benefits. So we could consider using their tier 2 or their tier 1 to have something like that set up. Will that be possible?
Short answer would be yes. It's something I'm really excited that you are looking at an option like that. And I think everybody on the trustees and Acacia side, it's really dear to our hearts to quickly work on a solution like that, because the reality is it's not just today it's you, tomorrow it's me, following day it's my son or my daughter. So the faster we come out with this. So the short answer was yes, the long answer was what I just said, but it's definitely something we are exploring at this point in time. Thank you.
Thank you, Papani. The next question will go to Hilda. So a member wants to find out which of the schemes they can use as collateral for a mortgage or a loan, and the steps or the process to go through to be able to acquire one, to be able to access that, sorry.
Okay. Currently, you can use your Provident Fund as a collateral to access the loan. If you are interested in accessing the loan or the mortgage product, you can just drop us an email at our info.trustees email, and then we'll pick up and then follow up with a third party and then start the process on your behalf. Thank you.
Thank you, Hilda. Sorry, I meant to add the second question. So another member also wants to know what happens to, okay, so he says he's been contributing for a while and his company has gone bust, but he wants to continue with his tier 2 contributions. Is that possible?
Okay, so we have a product, a personal pensions product that we can enroll such a person on. The personal pensions product has a PF kind of withdrawal basket, as well as an investment loan basket on their account. So we can enroll such a person onto our personal pensions product, and then the person can start contributing towards retirement.
Okay. Thank you, Hilda. The last two would be, we're having the same question from Daniel Kujo. Daniel, if you could kindly put the name of your institution there, because it seems you're having some challenges. So he's asking what staff who can access only their tier 2 and cannot access their tier 3 should do on the USSD code. So it looks like he's having challenges with our USSD code. And then the second one is why partial withdrawals are delaying. So it looks like it's a particular situation for his establishment. So Charles, if you can kindly include the name of your institution so we can address it. Okay.
Okay. Wow, I'm unable to mute myself.
Hilda, we can hear you.
Okay, sure. Great.
Okay.
So what Charles can do, if Charles can just drop his phone number, would investigate and find out why he's having difficulties logging onto the web platform and the USSD platform as well. And the other question was?
The other question was also around their delays in their withdrawal. So that's why I'm saying I'm sure it's a specific, it's a unique issue to
it's a withdrawal.
Yeah,
it shouldn't delay. So we'd want to investigate, find out at which stage the withdrawal has gotten to and what's causing the delay. So when we have his number, we'll just follow up on that request and then get it resolved for him.
Okay. Thank you, Hilda. The last one, a member wants to know how tier 3 works and how a person qualifies.
Okay, the tier, we have the personal pensions, which is a tier 3, and then we have the Provident Fund. So I'd want to know which exactly he's trying to find out about.
I believe the Provident Fund.
Okay, so if it's the Provident Fund, the Provident Fund is set up with the employer in collaboration with the employees, and it can be an employer alone contribution, an employee alone contribution, or a combination of both for the members to onboard onto a Provident Fund product. And just like the tier 2 product, what then happens is that the monthly contributions come through. But what is unique about the Provident Fund is that every employer has a specific set of rules that they use to manage the Provident Fund. And they would usually, the employer will usually use it as a retention strategy for their employees and say that, okay, I'm contributing so much to your Provident Fund. You are also contributing so much to your Provident Fund, but should you resign before this number of years, you would not be as the employer contributions will not be accessible to you. So for us at Enterprise Group, for instance, you need to have at least served for 5 years before you can have access to the employer contributions. Prior to that, you have access to only the employee contributions. Thanks.
Thank you, Hilda. So Comfort, I believe that answers your question. Okay. All right. So as we go through, if there are any more questions, kindly put them up in the comment section, and we'll also be displaying a slide on how you can reach us after this program on your screen. So you should see that shortly. Okay, so we have a last question. Hilda, the member wants to know what the cutoff age is for enrollment on Tier 2 and Tier 3.
There is no cutoff enrollment for Tier 2 and Tier 3 unless the member is 60 years old. So for Tier 2 and Tier 3 contributions, irrespective of the age of the person can join and commence contributions through the employer. If the person is a private entity, if it's a self-owned business, and for instance, the person is the only person who is running the business, we can enroll the person onto a personal pensions product. If it is a small scale business that has about 2 or 3 people on the account, we can enroll those people onto our occupational pension schemes.
Oh, okay. Thank you very much for that, Hilda. So, ladies and gentlemen,
Ransford, sorry. There's a
Joe.
question here that I thought was very important.
Okay.
Ezekiel Okan asked that question. I think we need to clarify exactly, because it says, why does it take enterprise a long time to credit members' accounts with monthly contributions made? So if Hilda could explain the turnaround time in crediting of members, and in this particular case, what could also result in a challenge. But it would be good to know Ezekiel's company and where he comes from so that we could investigate. So Hilda, if you could explain the turnaround time or the process of the crediting to the team, please.
Hilda, you're muted, please.
I think she's frozen. I think it's probably an internet issue.
My Teams went off. My apologies, team.
Yeah.
Okay, so as enterprise strategy, we have a set process that we have shared with employers to go through. So on a monthly basis, there's a validation process that employers are supposed to go through. When they go through that process, we provide them with a validation code. And in using that validation code to make the payments, we are able to do a quick identification of the payment and then do the allocations. However, despite the fact that that is the process, sometimes we find some slippages through the process, and the process may not be adhered to, and then it becomes difficult to do the member allocations on time. If there's a peculiar issue around your organization, would want to pick it up, and then if you can just drop your email address and your phone number and indicate that you are the one making this particular complaint, we'll pick it up and get it resolved and do the necessary reconciliations with your employer.
Thank you very much, Hilda. So Ezekiel, if we can drop your employer's details in the chat, we can pick up this conversation from here. Thank you. So as we said at the beginning, we very much like to keep the time. So we've come to the end of our Q&A session, and would like to invite our Managing Director once again, Mr. Joseph Ampofo, to give us our closing remarks. Joe.
Yes, Ransford. So, ladies and gentlemen, thank you so much for spending almost about 2 hours of your time to engage with us in this series that we've adopted, and we believe that we've been able to share valuable information. I've also learned quite a bit as well. I took a few lessons that I picked from Papa Ni regarding at least trying to do some exercise every day, and at least they say walking won't kill you. So just to try and do some 20 minutes or 30 minutes walk each day. And also from our colleagues from SNIT as well, the kind of feedback that they gave us regarding some of these issues. So we don't take it as we've completed, but this is just part of the series. Please be on the lookout for the next series where we continuously engage you. I saw a comment in by one of us regarding us having to educate people on the plantation and stuff like that. Please, we need to be able to pick up your contacts so that we can be able to follow through. And it's always a pleasure to engage our members in part of this discourse. And we believe that this is the way to go to be able to empower our clients and our members to have a lot more information on what we do. So thank you all for the time that you spend, and also for the valuable questions and contributions that have come through, because it's all in a bid to make our services better. So we thank you so much for the time. And we know that the team that we are talking to today, between 55 to 59, you work for close to 10, 15, 20, some of you almost about 30 years. And we believe that you must be able to retire well. And that's why we retire in style. And that's why we are having this engagement with you. So enterprise, your advantage. Thank you, Ransford.
Thank you very much, Joe. Thank you for your closing remarks. Ladies and gentlemen, I'd like to remind everyone once again that the recording from this session will be available on our YouTube channel, so you can go on there and access it and play it back, so you can pick anything that you may have missed from this session. But if you have any concerns, any questions, any queries that you'd want to address to us, as you can see on the page, these are our call center numbers, our email address, our Facebook link, web portal, and all our branches. You can have access to us through any of these means. So thank you very much, as Joe said, for spending your morning with us. It's been a well spent time, and we are all taking learnings from this session, and to have a better retirement when the time comes. So we'd like to close with a prayer. So if we can all close our eyes for a quick prayer. Lord, our Heavenly Father, we thank you for this day. We thank you for this session. We thank you for your presence that has been with us from the beginning and bringing us to the end of this session. We thank you for the lessons, Father, and for the topics that have been addressed. We thank you for things that we've picked up. We thank you for all that we're going to take away from this session to improve our lifestyles and to improve, oh Lord, our retirement as well. We thank you, Lord, that you've been with us and you brought us to the end of this program successfully. And Lord, we give you all the praise and all the glory. We ask that as we move from here, you shall continue to bless us and protect and guide us through the rest of our day and through the rest of our week. And at the end of the day, we shall be faithful and just give you all the glory. We thank you and we bless you through your Son, Jesus Christ, our Lord. We prayed with thanksgiving. Amen. So thank you all once again for your time this morning. Goodbye.